All right, how's it going, everybody? This is Tim with King's Options, and we're going to go ahead and get into a few things here. Sector tracker, as you can see, for the last 5 days, everything has been looking up, which isn't too surprising. If you've been watching the markets at all, we've actually been, well, we'll go into the charts, I'll show you that. But everything's looking pretty good. Consumer discretion is actually a bit of a surprise for me, and how, uh, well, technology is not really that big of a surprise, but consumer discretionary is. I did see the latest reports on the consumer sentiment, and they were looking pretty good. So, um, either way, that's over the last 5 days. That's what we've got. So, that if anything is a sign of recent strength. The only thing that isn't looking so good lately is utilities. Um, yeah, it's the only thing in the red. Let's take a look at the last 6 months. Look at the last 6 months. Everything's up except real estate and staples. And let's go over the last year. Everything's up on the year, even real estate and staples. So, with that being said, there's your sector tracker. This website has changed, by the way, if you use it. State Street Investment Management, same link as it was before, but it looks a little bit different than it used to. Let's go ahead and go into earnings whispers and take a look and see what's coming up for the coming week. We've got TSMC. That's going to be something to work to keep an eye on. We've got some financials starting in here, so we're going to want to keep an eye on those. A lot of financials, actually. So there you have it, especially with the recent announcement that we may be looking at a. Well, I don't know if it's kicking into effect, but the announcement made that the president is going to be trying to get uh, credit cards capped at 10%, at least for a period of time. I don't know how that'll work, but that may cause some turmoil in the financial sector of the market. If it goes into place, it definitely will cause some turmoil in the financial sector of the market. But either way, there's your earnings for the upcoming week. And let's go ahead and take a look at the economic release calendar. Now, I haven't done anything here yet, so we're going to go ahead and turn on the market movers. And this is a real basic look. By all means, I highly recommend this. This is my favorite calendar. Everyone's got their favorite calendars for this kind of stuff. This one's mine. It is the CME Group under Education, Events, Economic Releases. Well, you got the link right there. Help yourself, and you can put in whatever you want. So Monday, here's our mostly commodities, right? And Central Time, so late morning Central Time. Then Tuesday, CPI. This is going to be important, always is. So watch for CPI, 7:30 Central Time, 8:30 Eastern Time. Keep an eye out for that. Wednesday, where's the one I'm really thinking of? Let's see, retail sales, PPI, also going to be huge, huge impact, or potentially huge impact. So keep an eye out for these. All pre-market, 7:30 Central Time. And then Thursday, we're going to go ahead and have the normal jobless claims, but as well retail sales. And Friday, industrial production. Now, one thing about Wednesday, I want to bring up, and I think it's Wednesday, but check the news, check whatever feeds you follow. There was supposed to be a ruling on the tariffs from the Supreme Court on Friday. That got delayed, and it is supposedly delayed to Wednesday, the 14th of January. I don't know what time. If they stick with the same time schedule, it was slated to be released 10 o'clock in the morning, I believe, Eastern time. But that is something you're going to want to pay attention to. That could definitely cause some turmoil in the markets as well. All right, let's go take a look at the charts real quick. Get this knocked out the way. Okay, so these lines, I haven't done this in a while, so sorry about that, but these lines were drawn on the charts from before, and we can actually see how well they have held up over the past couple months, because I think last time I put one of these out here was like in October, or yeah, I think it was October. Um, I may have drawn new lines in October trying to get at them again. So, but either way, they've been on there for what is this? January. So we've been on there for 2 months at least. And you can see how well these lines were respected from where they were placed. From going down to coming back up and holding. And we did see a bit of a reset right here. We popped back up. We still struggled around this line, popped up above it. breakout, almost a fail, dip back down below, and looking to break it again with an all-time high in the ES. Okay, so this is S&P 500. Let's go ahead. Let's go ahead and take a look at. Let's play nice. It's not one to play nice. Give it a second here. Come on now. Okay, back to it. Sorry, I had some notifications on a separate screen that I had to take care of. So, anyways, there's the ES. There's what it looks like. Again, we are seeing the all-time high that we popped up to again. Came in intraday. Let's go to the RTY. Haven't moved any of these lines, these levels that we've set some time ago. Again, popped up, nailed the level perfectly. Dropped back down, held it, popped back up, almost hit it, dipped down below it, but the very next day came back up above it. And then as we approached this high again, what we ended up with, and this is actually indicating to me that I probably went ahead and set these lines sometime in early December. So everything, we'll say everything after December. It was about halfway through December. Yeah, they held these lines very, very well. I know I didn't put a video out in December though. So at any rate, so it popped up. Struggled a little bit at the top here. Tried to break out, false breakout, dip back down below, and then we saw a breakout over the past couple days. And this is a daily chart. With the all-time high being set, not just intraday, but even closing at an all-time closing high. So looking pretty good there in the RTY. I got to tell you, with everything that's been going on economically, the RTY is not real surprising that they're seeing this kind of movement. It really isn't, because a lot of the stuff that's been going on policy-wise has been really helping more of the small businesses or the not large cap businesses, small cap businesses. Well, I don't know why I couldn't think of that word, but yeah, the small cap businesses. So this is not real surprising. Let's go ahead and take a look at the YM. The YM, kind of the same thing. If we count it from the same time, this middle of early to middle of December, let's say I set this line in here, then we held it, tried to break above, drop back down, popped up. As we came back down off of a high here, we were kind of testing this area again and then came back up. And we are currently set to break that all-time high again. So I think we're actually showing a lot of strength, you know, and when we so far the first three we've looked at, all showing a lot of strength. And I like the way that looks. The only thing, if I was going to say there was something I didn't like, the only thing that I don't like is that if I'm looking at this right, I remember what I said here. These should be third standard deviation away from the mean, which means that we are approaching, again, this third standard deviation. And that's when we see the pullback. Now, that's not to say we won't have strength. It just means that be careful when we're up here. We get a higher probability of a reversion to the mean trade, even if the overall trend is still up. Let's go to the NQ and see what we've got in the NQ, my personal favorite. Now, this one I know for a fact that was set back here because I remember putting it on that candle. Now, whether I did that sometime in this area, same area as the other ones, could have been. But either way, this is still the all-time high. And you can see how well we have respected this level, saying we said at the same point, it was based off of here. We've held it here. And now as we come to it again, we've tried to pop above it. We dropped down almost down to one of the lower areas that was set right? Which would have been based on this nonsense. We did dip below it for a second. Very next day, popped right back up, closed on it almost exactly, but continued the upward trend. And then dipped back. Looks like we tested again. And if you look at the trend line, boom, boom, boom. I mean, definitely a nice trend to the upside. We struggled a little bit, but when we got back up to the top, false breakout, popped down to the average. And now this is the first indication. This level is huge. You see this big blank spot up here? This is all open liquidity. Tons of liquidity. Tons and tons of liquidity. Everybody that is in these positions, got in these positions, and either held or recently put there, have got their stops in here, which means there's a ton of orders in here to soak up. We can shoot up to new highs quickly. And this one is very close still to the average. I'd say probably sitting at about the 1 standard deviation, just eyeballing it. Maybe between the 1 and the 2. But more importantly, this is the first close we have had above this level since November 3rd, as a matter of fact. First close we've had. You can see where the close is. It is above all the tops of those candlesticks, save that one. But it is actually a close above the established level that I set at 25,876. So that to me is significant. I really like what we're doing here. I think there's strength in the markets, and we have the ability to push higher. Now you're going to have to be careful. We do have a lot going on economically, politically, socially, in the States, which could overturn the apple cart, so to speak. But as a whole, I think the markets still look good. So, all right, that's all I've got for you. A little bit of a sloppy readout today, but we'll get back into it. We'll get better than that. So I'm just dealing with some hiccups. And till then, we will see you next week. Have a good evening.